Fintech IPOs are back with Circle's strong debut this week and Chime on deck. We'll look at the fintech startups that are next in line, and we'll launch a new segment on the show called IPO Wish List. In IPO Radar news, Netskope takes the next step toward its debut, and xAI is the latest hecticorn on a tender bender. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com, and Fintech IPOs are back. Circle just opened. I'm recording this on Thursday. Circle priced its IPO at $31 a share, and that was up from the initial range. It was up from the adjusted range, and the stock opened up at $69 a share, jumped into the 80s, into the 90s, and it was halted a few times. And as I'm recording this, that's trading again now at $79 a share. So up 150% from the IPO price. And the best part about this deal is that there was a lot of really solid retail investor access at the $31 price. This is why we invest in IPOs. It's essentially an arbitrage. You have the underwriters that underprice this deal in a way that they can reward their wealthiest clients. They're still raising money for the issuer, and the issuer wants to see that pop because it's a good sign. It's a sign of a healthy IPO. They get the pop. The underwriters win, the issuer wins, and retail investors are usually left out of the deal. In this case, we've got reports from several investors who received somewhere in the range of 10 to 16% of their requested shares at Robinhood. And at Fidelity, we had people getting shares there as well. I got 100 shares out of Fidelity. I also got a share from Webull, and I kind of botched my Robinhood request. I didn't get my request in at time, but a friend of mine put in for 1,000 shares at Robinhood, and he got 109 shares. Stock's up 150% right now, and you're talking about doubling 1.5 times money on an investment. It's an arbitrage play, and that's why we invest in IPOs. And I had a guy on Twitter reach out to say, hey man, where do you think this thing's going to open? Do you think it's going to open at $60 a share? And I was like, I don't know. I'm in at 31. If I get into an IPO at the IPO price, I invest. If I don't get the IPO price, then I don't invest. I'm not a trader. I don't know what's going to happen once it opens, and that's not my specialty. My specialty is finding access before the IPO at the IPO price or even earlier, pre-IPO. And then you get this arbitrage because we know that retail investors, the broader investment community, institutional investors want to see these companies public, especially in the crypto space. Enthusiastic investors out there want to be able to invest in stable coins like Circle, like Ripple, and others. And right now, all they have is Coinbase and Robinhood. That's the crypto play for the most part. Now they have another one, and it's Circle. So a couple things to look at with an IPO like this. Remember, the initial price range was 24 to 26. Last week on the podcast, I predicted they're going to probably bump that up and bump up the offering, which they did. The next range was 27 to 28. And once they narrow that range and raise it like that, they usually don't move it too much from there. But it did price outside of the range. We also got a report from Bloomberg that said this deal was 25 times oversubscribed. So you combine those things, you see a higher range and you see the price outside of the range. These are all positive signs for a powerful debut. And then the morning of the IPO, we started getting our allocations. And usually when I get a Fidelity allocation, I'm a little bit worried that the price isn't going to pop. But in this case, I got 100 shares. I requested 300 shares from Fidelity. They gave me 100. I'm thrilled about that because I bought them at $31 a share. And I'm watching the price right now. It's at 83 at about 1:05 p.m. Eastern time. So you see those positive signals, and that's when you say, okay, this looks like it's going to be a positive deal. Now, up 170%, that's not necessarily a healthy IPO. It's great for us who got access to it, but when we see those kinds of jumps, it means maybe the underwriters didn't price this well enough. It could mean that the float is too small and there's just not enough shares to go around, and the halting that we saw the morning of the IPO, it was indicative of that as well. We're also seeing a divergence between the private market value. I looked at the private valuation on Caplight yesterday, and it was about $6.7 billion. And now we're probably closer to $15 billion in the public markets. And so why are all these private companies staying private when there's a demand for shares of these private companies? And that takes us to Fintech IPOs. We haven't seen many Fintech IPOs since 2021, 2022. In fact, it's been very slow. I couldn't find any exciting Fintech IPOs in 23 and 24. We go back to 21, and that's when we saw Robinhood and Coinbase. We also saw Affirm and Paymentus. So these were IPOs that were well received by the public. However, 2021 was this euphoric time, and then in 2022, prices came down. So if you look at a chart of Robinhood or Coinbase, there was quite a bit of a trough that happened in that time period. But now that those stocks have recovered, I think these fintech companies are ready to move forward, and we've seen it with eToro. eToro was the first one really to come out, and it's still holding its own up from its IPO price. This Circle IPO is just going to blow people away. If this doesn't motivate several other companies to IPO, several other fintechs at least, I don't know what will. 2022, we saw rocket companies, we saw Upstart and Lemonade. Those are more on the insurance side. Rocket's a mortgage, but it's a fintech, right? Fintechs are back. And in part, we saw that because of the new administration coming in, and people saw that as a positive sign. You can look at the charts of a Robinhood or Coinbase. Coinbase being the pure crypto play. It's now part of the S&P 500. And we have some more fintechs that are confirmed in the pipeline. And this bodes very well for them, especially Chime, which is next Thursday. I'm recording this on Thursday the 5th. Thursday the 12th, we're going to see the Chime IPO. It's going to price Wednesday night, just like all IPOs. It's going to price the night before. The price range is similar at 24 to 26. But I think Chime's underwriters look at this deal and say, maybe we got to bump this up a little bit. And depending on how much it bumps up and the reception of this company, Chime is not a crypto company. It's a neobank or a banking services app. It's not crypto. And Circle probably has a lot of crypto bros out there who are just buying it because they believe that crypto is the future, and they don't have a lot of opportunities to buy into crypto other than buying Bitcoin and XRP and Solana, Ethereum, and investing in those coins. But those coins aren't companies, right? They want the companies behind that. And so they want the Circles and they want Coinbase. And there's a whole bunch of other companies that if they go public, the crypto enthusiasts will participate. And I think that's a little bit what we're seeing here at Circle. It's 111. Circle's now around $82 a share. Lots of enthusiasm for it. And I don't think it's going away. This is just the beginning. So we talked about Chime. Chime is next. That's next week. Klarna is another fintech that has filed for an IPO. It suffered from the tariff announcement and it paused its IPO. We haven't heard much about the IPO. We're hearing the CEO talk a lot about other things like AI, and now they're talking about how Klarna wants to get away from the buy now, pay later reputation. They want it to be a broader fintech, get into whatever else to diversify its business. And that's fine. I think everyone wants to see a diversified business. We just want to see the IPO, update those terms and get them out. And I think after Circle, I can't imagine what's holding them back. It's time to go forward. Maybe next week we start seeing terms updated, or the following week, or we might be getting to the point where people want to wait until after the summer to IPO. Another up next fintech in the pipeline that I think sniffed out this Circle deal and is ready to move forward is Gemini. That's the Winklevoss twins. They have filed confidentially for an IPO. That filing came out, at least it was announced, or we figured it out in March of 2025, so not that long ago. And just a month before that, it was said to be weighing an IPO. If the confidential filing's out there, then they've hired an underwriter and they're probably moving forward. I think they see this deal with Circle and Gemini says, we need to get out and get that stock publicly traded. Ideally, they'd be offering some shares to their customers. And again, we just want to see more retail access. Customers is the easy way to do that, but you can issue shares through Robinhood or SoFi or the Fidelities of the world. Or the Fidelity is usually for higher net worth investors. We want to see more shares going to the Robinhoods and SoFis and Webull and TradeStation through Click Markets. Those are the channels that most retail investors can invest through because you don't need to be accredited. You don't need to have a high balance on your account to get access to the IPOs. Gemini comes out with a higher valuation. There's more shares to go around and more ways to participate. And Gemini is another crypto-centric pure play. And people are going to be excited about that one, especially customers, especially crypto enthusiasts. One last one that we know is in the pipeline, at least is said they're in the pipeline, and that's Kraken. Kraken is another one of these crypto exchanges. We got a report on March 7th that says crypto exchange Kraken is preparing for an IPO in 2026. That was a Bloomberg report. So Kraken is a crypto exchange. It's ready, at least it's preparing. It's moving toward its IPO too. And from the looks of this Circle deal, investors want to participate. Kraken also announced on April 14th that it plans to expand beyond crypto, announcing US-listed stock and ETFs. They've announced the initial rollout of commission-free trading for 11,000 US stocks and ETFs starting today. This is back in April. Limited number of states, looks like a handful of states where Kraken can do this. So what we saw from Robinhood in 2021 is they rolled out IPO access for their IPO, and I predicted they would do that on my blog. I don't know that Kraken will do that, but I'd love to see Kraken start offering IPO access to future IPOs, but looks like they're opening a broker. I haven't talked to anybody that's using it, but once that rolls out, and it says they're also preparing for this IPO in 2026, it's a pretty solid candidate. Looks like they're moving forward. You got to think they're enthusiastic about it now that Circle is out. And of course, we'll watch Chime next week. It's time for a new segment on the show this week. This is going to be an occasional segment, unlike IPO Radar News, which is every week. And I'm calling this one IPO Wish List. I even had Gemini give me a little graphic to celebrate. I'm going to talk about 5 Fintech IPOs that are on our wish list. And we have our upcoming IPOs page on the Access IPOs website. It's one of the core pieces of content on the website. And on that list of 70-some stocks, I try to identify the companies that are most likely to move forward with an IPO within 6 months to 5 years or so. Some of them are on the verge of IPOing. Chime, for example, is number 1 on that list. But we're going to look at the fintech companies that are private, that are on our watch list or IPO radar list that we really, really want to see go public because we think they're ready, because there's demand for their shares and people want to invest. And we want to get these companies into our 401ks, our IRAs, our ETFs and index funds, and maybe even into our personal portfolios as individual stocks. We want to get these companies out of the private sector and into the public sector so that more individual investors can benefit from their growth. So the first one, and I think the pretty obvious one today, is Ripple. Ripple is a cryptocurrency company. It has the XRP cryptocurrency. It has a stable coin now to compete with Circle. And Ripple is really one of the darlings of the crypto world. I can tell you, anytime I'm interacting on Twitter, X, about this company, people are really enthusiastic about Ripple, more so than Circle. If this IPO today were Ripple, I'm willing to bet it would have been a 300% increase because people just love this company. And the way that they've set up this XRP cryptocurrency coin is that as the value of that coin grows, Ripple actually retains a big share of the total eventual float, which is something like 100 billion XRPs. And Ripple still holds like 50 billion of them, something like that. And so I'm sure some crypto bro is going to correct me if they watch this and I got that wrong. But as the price of XRP rises, the price of Ripple rises. And Ripple is a similar business model to Circle. It's going to facilitate international transactions of finance through APIs that you can build into apps. It's going to help institutions transfer money around the world. It's going to do it faster and cheaper than the status quo. And the status quo being the SWIFT system or whatever banks use. Everyone knows it's slow. It's expensive to wire funds. It's sort of ridiculous that that's still a thing. And that's the real appeal of Ripple and Tether is another stable coin. And Circle, and that's why people are excited about it. So I wrote a post on my website. Right now it's saying Ripple is unlikely to IPO in 2025. Ripple had some issues with the SEC, which have gone away for the most part since the new administration came in. Brad Garlinghouse, he's the CEO. He was on 60 Minutes not too long ago talking about crypto, and they've really benefited from the changeover in the administration. He was on a podcast not too long ago, October 2024, podcast called Thinking Crypto. And you can see this video on my webpage. It's embedded, or go to YouTube and look up Thinking Crypto. The host of the show asked Garlinghouse, hey, when are you going to IPO? And Garlinghouse said, an IPO has not been a high priority for us. And part of that is because the SEC is not our friend. We want to make sure our shareholders have liquidity. And we want to make sure our shareholders are happy. We want to make sure the company is valued appropriately. And we don't take anything off the table, but it's not a high priority. Now, this was back in October 2024, where was that 9 months since then? And they've cleared out their SEC problems. Circle just went live to great fanfare. Ripple's fans are even more enthusiastic about the company than Circle. He also says in this interview that even if they were to move forward with their IPO, it would take at least a year to even get that moving. Now, assuming that once the SEC got clear that maybe they're thinking about an IPO now, certainly after the Circle IPO today, it's a good candidate for an IPO, especially while the administration is crypto friendly and the SEC regulations, they're still waiting for some clarity, but it's time. I think this company moves forward. So that's why I put it number 1 on the IPO wish list for fintechs. All right, number 2, and I should move through these faster or else I'm going to be editing this all day. Number 2 is Cross River Bank. Now, this isn't a household name. Cross River Bank is an FDIC member, so it is a bank, but it's a neobank, and it's been a technology-first bank, and it offers banking as a service, BaaS, to dozens of companies. The company is located in Fort Lee, New Jersey, across the river, Cross River, from Manhattan. Has clients include Affirm, Revolut, Rocket Loans, Plaid, some names we might talk about a little bit later. And the reason I put it on this list, and it's on the upcoming IPOs list, is dating back to October 2023. Cross River Bank's CEO said at a conference that they were eyeing an IPO in 2025. The Cross River Bank IPO date is currently unknown. CEO Gillis Gade told Ion Analytics reporter Troy Hopper at the Money 2020 conference in October 2023 when asked about a potential NASDAQ or NYSE listing in 2025. He said, quote, "That's the plan. We have to. Our investors won't be happy with me if we don't IPO." So yeah, the last raise was a Series D in March 2022. They raised $620 million at a $3 billion valuation. We don't have an updated valuation on that. I'm looking at Caplight, T. Rowe Price, Battery Ventures, Ribbit Capital invested in this one, KKR, Andreessen Horowitz. So some big name venture capital investors, and they are going to want liquidity. They always do, right? And this might not be big enough at about a $3 billion or maybe more valuation. May not be big enough to do widespread tender offers. I think this CEO was sincere about that IPO in 2025. They're not very good at predicting timelines. If you've noticed, these CEOs will say, yeah, we want an IPO, and then they might walk that back a year later. We saw that with Skims, certainly. They're not good at predicting the timeline. So maybe he was thinking about 2025. Maybe he'll get it in. Maybe they're working on it. But I'm thinking maybe it's 2026 for Cross River Bank. Not a name that everyone knows. This company was only founded in 2008 after the banking crisis. So it started when things were bad. It was a great time to start a bank. I've got this one on my alerts list. Haven't seen any updates, but we'll be watching for it. Don't be surprised if you see news around this company along the lines of they've hired a bank or they're considering or they're in talks to IPO. Next on our IPO wish list for fintech companies is Revolut. Revolut is a UK-based neobank everything app. It's quite a large company, recently running tender offers around $60 billion valuation in February 2025. Revolut is not a bank in the traditional sense of the word. UK banking has a similar FDIC type of insurance called the Financial Services Compensation Scheme, the FSCS. Attaining a banking license has been challenging for Revolut despite being a huge company and being extremely popular in the UK, apparently. It's London-based, but it's got offices in Australia, New Zealand, Singapore, Switzerland, all over. It is venture-backed, DST Global, Index Ventures, Ribbit Capital, Tiger Global, some big names there. And there's no IPO date set, but there was a Wall Street Journal article that reported that a 2026 IPO is widely expected by industry insiders, according to media reports, though the company hasn't confirmed any plans. I looked this up and I couldn't find what the journal was referencing as media reports to support that claim that they were moving toward a 2026 IPO. However, in May 2024, Revolut partnered with Morgan Stanley to coordinate the sale of a $500 million tender offer to help employees get some liquidity. And Revolut's leadership has said that the company would conduct its IPO in the United States due to less stringent regulation and better liquidity. I got to think that if there's a $60 billion bank or banking company that's working toward getting a banking license, that the UK is going to do what it can, or the London Stock Exchange is going to do what it can to keep that company in the UK. Now, there's always ADRs where something can trade primarily on one exchange and also trade on another exchange. But the US taking this Revolut IPO from London would be a bit of a slap in the face. Revolut has said they want to do that, but We'll see if that happens. But either way, we want to see an IPO from Revolut, $60 billion company. I'd rather see that public and in our index funds and ETFs rather than private. Number 4 for our IPO wish list companies in fintech is Plaid. So Plaid is that technology that connects your bank to your brokerage or your brokerage to whatever, your personal finance software for budgeting or for network tracking like Empower or Bolden or Projection Labs. If people follow me on my other blog, Retired Before Dad, I talk about those a lot. These app builders in finance use companies like Plaid to connect data securely. Plaid was supposed to be acquired by Visa for $5 or $6 billion a few years ago. Regulators got in the way and shut that off. And so we've been assuming that Plaid is working toward becoming a public company. Since then, it was valued as high as $13 billion. It recently raised $575 million at a $6.1 billion valuation. That was April 2025. It tapped Goldman Sachs to help out with that with a share sale. This was a liquidity event, another tender offer, which tender offers, I'm going to talk about it a little bit later in the podcast, but tender offers are part of the reason why companies aren't going public. Companies are instead giving liquidity to early investors and employees through these tender offers. Plaid is guilty, but we'd still like to see them public. Now, my concern with Plaid is that this is becoming a competitive landscape. There are several companies that can do very similar things as Plaid. So I think regulators might have overstepped a little bit to block this deal with Visa, but nonetheless, Plaid is a classic fintech that we'd like to see public instead of private. So that's why it makes our list, and there's no indication that it is going to go public anytime soon. It just raised a lot of money, so it's probably enough money to get it to the public stage. But an IPO date in 2025 seems very unlikely. In fact, I think they said, Fintech Plaid raises $575 million, and it says it will not go public in 2025. So there you have it. Not 2025, maybe 2026. Either way, it's on our wish list. We'd rather see it public than private. And the last company on our list, and this is one of the IPO wish list all-stars. If we were doing a global list, this would probably be in the top 3. And that, of course, is Stripe. Stripe is one of the original innovators in APIs for conducting payments in the digital world on websites, on apps. And if you've ever worked with Stripe through an app or paid through Stripe, you probably didn't even notice, but it's a very smooth experience. They are salami slicing the planet with payments, taking a small piece of payments all around the world for various payment apps. Chances are you use Stripe more frequently than you know. If you're an app builder, you certainly know it. If you run the PTA like I have, or if you help with the swim team, we use Stripe to collect payments for the swim team when we're registering swimmers. It's all over the place. It's a very good user experience. Companies valued around $90 to $100 billion right now. The issue with Stripe is they have a lot of investors, but they've maintained a pretty tight cap table over the years. I have seen availability on pre-IPO marketplaces where you can join an SPV. They put the SPV onto the cap table, or there's an SPV of an SPV. But for the most part, Stripe has kept a pretty tight cap table, and they're able to stay private. The Collison brothers were on another podcast, the All In podcast. They were talking about why they're still private, and they made a couple good points. One being that Goldman Sachs, for example, stayed private for many, many years before it went public. Fidelity is still a private company. And so there's precedent of companies that want to stay private and not having to go public. And Stripe is one of the masterminds of this tender offer maneuver where you hire a bank to transfer shares between employees who want liquidity and investors who want to invest. Typically, it's VC investors coming in, venture capital, private investors who have relationships that get them into these companies. And then the employees tend to sell, unfortunately, at a lower valuation than what it would probably get on the market. So anytime you hear tender offer for a pre-IPO company, that's code for, hey, we don't want to IPO yet, but we're going to give our employees some liquidity at a discounted price to the employee. They're just not going to get as much out of it. We'd much rather see an IPO and get a fair market-based price for those shares. Stripe is at the point where they may never IPO, but it's number one on our wish list because we all want it to be public. It's a $100 billion company. It's growing. It's taking a cut of payments all around the globe. They're talking about stable coins. They're talking about crypto and tokenization. They are nimble because they're not public. They don't have to report to Wall Street. But the Collison brothers are showing no signs of wanting to IPO the company, despite how much we really want it to IPO. There are a handful of these unicorns that are worth close to $100 billion. And if any of those IPO, it's going to be just a monumental event. And we're still waiting for the first one. Think of SpaceX, OpenAI, and there are a few others. So Stripe, number one on our IPO wish list for fintechs. At least for now, we'll be monitoring these. Stripe would make our all-star list as well. But for today, we're just starting with a wish list for fintech IPOs. Probably not going to see any of these 5 that I've talked about in the next year. Maybe Ripple has the best chance now, but we might be just waiting. But like we talked about last week, the window is open. And when you see this market demand for IPOs, you'll be surprised at how many more companies come out. And I think the window being open, the time is now to hire that banker to file that S1 confidentially and get moving, because when the window is open, it's not going to stay open forever. You got to get that company public. Don't miss the window. Quick update here on the Circle IPO. It's now trading at $95 a share, 1:43 p.m., up 200% on this IPO. I've actually never seen an IPO up 200%. Especially one that I've invested in. I own 100 shares. I just made $6,400 on this IPO. And I don't think that'll hold. The stock could crash. I can't sell my shares because of the flipping policy. I'm not going to sell my shares because of the Fidelity flipping policy. But nice to see that kind of jump on a stock on the first day. This is why we invest in IPOs, to arbitrage from what those bankers price it at and where it opens. Doesn't always work out so well, but this one is going to make up for that Venture Global loss that I had earlier this year. Pretty thrilling to watch it, and I hope you're watching as well. This podcast won't come out till Saturday morning. I hope you got a chance to watch this Circle IPO at the same time I did while I'm recording this. Let's move on to IPO Radar news. We've got about 150 companies on our IPO radar. I add new companies every week, usually about one per week. Some companies fall off the radar. Circle today, not going to be on the radar anymore. So the radar list is always changing. Sometimes companies get acquired like Wiz or Lacework, or companies just lose favor with the private markets and don't grow into public companies. And so it's always changing, but I'm really trying to find the private companies that have the most potential to become a large IPO someday. And the second one we're going to talk about today is a very good example of how a company can go from nothing to something in a very short period of time. First up is Netskope. So Netskope is a cybersecurity company. If you go to my website and look under topics, cybersecurity, there's a handful of these companies. Rubrik was the big IPO in 2024, at least the big cybersecurity IPO. We were hoping Wiz was going to be another one of these blockbuster IPOs for cybersecurity, but Google bought Wiz. That was really a disappointment. Netskope was number 6 on our list of the top 10 predictions of IPOs in 2025. Some of these are coming true. If you go back to the blog post around January 1st or so, it might have been in December. We had CoreWeave, Cerebras, Klarna, Venture Global, Chime was on there, Netskope was on there, Circle. So far, this list of predictions is coming true. So how do I know that these companies are moving forward? Well, there was an article in the October 30th, 2024 Wall Street Journal report that said CEO Sanjay Berry on record. He said, "We're watching public markets and investors' receptivity to quality IPOs. And if all of those remain positive, then the second half of next year, 2025, is our plan." Well, on May 28th, last month, we got an article from Reuters, an exclusive from Echo Wang and Milana Vin. It says, cybersecurity provider Netskope taps Morgan Stanley for U.S. IPO. And this article confirms what we learned back in October, that Netskope is aiming to go public as early as the third quarter of this year, the two sources said, indicating the IPO could value the company at more than $5 billion. All the sources cautioned that the factors, including timing, valuation, everything can change. They have to always say that. In fact, a lot of times companies say they're going to IPO, the CEO's on record, and they don't IPO for one reason or another. But what he's saying about quality IPOs going out and receptiveness, Netskope would certainly have a path to move forward based on what we've seen from the fintechs, but really looking back to that Rubrik IPO. As I'm recording this, Rubrik is trading at $100 a share. The stock is up 213% since its IPO. Netskope is a smaller company, but this getting out into the public could raise its valuation. They've hired Morgan Stanley. Morgan Stanley has been one of the brokers that's been moving forward with IPOs, CoreWeave most notably. Hinge Health is another. So the fact that Netskope is working with Morgan Stanley, they said last year that the second half of 2025 is their target. This recent article from Reuters is now saying Q3 2025 is the target. Netskope looks like a pretty good candidate here, and we just want to see each little baby step toward that IPO until we get the S1 filing when it goes public. The next step here is probably going to be a confidential filing. Either we'll get a notice or a report that says Netskope has filed confidentially, or Netskope might even come out and say, hey, we've filed confidentially. You can't see it, but we've done it. And then occasionally we get no report, and we don't know if a company filed confidentially. They keep it confidential. And then one day I'm looking at the S1 feed and there it is. So all signs are showing like this is going to be a second half IPO. $5 billion might jump a little bit after watching Circle and watching Rubrik. We'll have to compare the Rubrik S1 filing to the Netskope, or look at Rubrik's current numbers and compare that to Netskope to try to get a valuation for that deal leading into the IPO. Quick look on Caplight. Last primary round was November 2021. That was the height of the IPO euphoria. Series H raised at a $7.5 billion. Caplight Marketplace showing it trading at about $12 a share and a $4.4 billion estimated valuation. That article told us 5, so we're in range there. I think that's a healthy range for a company like this to come out. So we'll be watching Netskope. And one last story to talk about here, and that is xAI. Now, xAI gets a lot of news attention. It gets a lot of investor attention. I don't think I've talked about it specifically here, but anytime there's an Elon company, and there's a handful of them, and I'll probably do a show just on Elon companies, but he's a very important figure in our space. Whether or not you like how he's behaved over the last year or more, anything he does, we need to pay attention to. And we've watched xAI go from being a $1 billion company in late 2023 to being a $113 billion company potentially right now. That's extraordinary growth. And I think it's playing a bit on the Elon factor and the AI factor, which could be a bubble or not. Certainly a hype cycle associated with xAI. xAI recently bought Twitter, X, from Elon's investors. And we all know that Elon bought Twitter at about $44 billion valuations. It's probably worth less than that, but he was able to retake the company, make his investors whole, and now Twitter, former Twitter, X, is now under xAI's ownership, and the synergies now are the content. AI companies need content and written content to train their models and to get smarter. Twitter certainly has that with its user base and people writing on there. And he's also trying to make Twitter into, I keep calling it Twitter, it's X. He keeps trying to make X into a place where people share video and maybe share their podcast and share TV shows and other things. So more of a multimedia company, whereas xAI is an AI company, an LLM. They have Grok, and Grok is now integrated into X. And so the idea that those two were going to merge is no surprise to anyone. And people were even talking about Tesla taking over these companies because Tesla is going to be gathering data for AI as well. And looking back years ago, Elon had talked about, or someone had asked him a question about, what if you just created a company called X and put all of your businesses under it? And that would be SpaceX, xAI, Neuralink, and Boring Company, and everybody. And he said, yeah, hey man, that's a really good idea. Hasn't followed through with it, but we've seen Elon do stuff like this. But the story I want to talk about is from the Financial Times, the FT, that Elon seeks a $113 billion valuation in a $300 million share sale. And when you hear the phrase share sale, that really means tender offer. And a tender offer, we talked about Stripe doing these. We've seen Plaid do them. We've seen companies like Viore do them. It's a way to provide liquidity to early investors and employees without doing an IPO or a SPAC. Hire a bank, figure out a way to transfer shares, set a valuation, and employees can liquidate some of their shares. xAI has gone up $113 billion in valuation since just a year and a half ago. So you have employees that are multi-millionaires but can't liquidate their shares. They're millionaires on paper. There's probably some billionaires that have been made out of this, at least 10 million maybe. The deal will allow staff to sell shares to new investors, according to people with the situation. The secondary stock offering, known as a tender offer, is expected to be followed by a larger investment round in which the company will offer new equity to outside investors. The March takeover of X valued the overall group at $113 billion, pricing xAI at $80 billion and X at $33 billion. Tender offers are the opposite of what we want to be seeing as retail IPO investors. Yeah, you might be able to get access to xAI pre-IPO, but we'd rather see the company go public so that everyone can have access to these companies. xAI's tremendous growth, going from a $1 to $6 billion company, jumping to 113 now. They're talking about $120 billion valuation. That happened very, very fast, and you can't stand up a company that is ready to go public that fast, unfortunately. You have to get a lot of employees in place who can prepare the company to go public and make it a company that can stand up to Wall Street scrutiny. Also, I think Elon's learned from his experience with Tesla that being a public company is harder to operate. He hasn't taken SpaceX public yet. He hasn't taken any of his companies public yet, except for Tesla, and he's learned a lesson from that. And so he feels he can grow faster as a private company, and he's probably right. Unfortunately, those of us who want to invest in these companies, it makes it a lot harder. Now, several readers of Access IPOs have reported that they've received access to some of these tender offers and some of the earlier funding rounds at a lower valuation. So kudos to them. Shares are available on these various platforms. You have to get on their email lists and open accounts and be ready to invest, but you will see xAI opportunities out there. And now that it's pricing at $113 billion company and possibly 120, there's going to be more opportunities. But ideally, we'd want to see this one public. Tender offers are the reason why, or one of the main reasons why companies are staying private longer. We want to see more IPOs. We want to see these companies IPO sooner so that we can participate in their growth through not only owning the companies, but getting them into our index funds and our retirement accounts. Unfortunately, that move from $6 billion to $100 billion, we missed out. Most of us missed out. Few of us own it through the ARK Venture Fund, but for the most part, retail investors widely missed out. Now that these big companies like Stripe, SpaceX, certainly xAI are executing these tender offers so frequently, it justifies other companies who are smaller for doing the same thing, and the bankers probably make a lot of money doing this. So there's a group at Goldman, a group at Morgan Stanley who's going in there and conducting these tender offers and making money. It's become a new business for them, so they're happy as well. But retail, U.S. investors, international investors in the U.S. stock market can't participate. And so when I see tender offer, I'm just disappointed. That said, xAI is an exciting company. People are excited about it. I do fear that it's part of this AI hype cycle and that maybe it's not worth $120 billion. They want to raise new funds at that level. This thing has just took off. I don't think Twitter is all that valuable a company. We don't see the numbers. It's private. We all know he overpaid at $44 a share. It's not the savior of this company. xAI is increasing its value because of its potential and because of the Elon factor, which may be enough. And when you add the AI hype cycle and a potential AI bubble, along with the Elon factor, and now that Elon's back to work, maybe this is justifiable for the time being at $120 billion. We don't know. It needs to be public to get a real valuation on it. So let's get xAI public and let ordinary investors participate in the growth if indeed it is this juggernaut that's going to be the next $1 trillion or $5 trillion company one day. Take it public and let everybody else join for the ride. There's a couple ways you can support the show. Subscribe, like, follow, wherever you consume your podcast or your video. You can subscribe to the Access IPOs newsletter. There's a link in the description or show notes of this episode. Just click that link, sign up with your email address. You're going to get an email once a week on Sunday mornings. Sit down with your coffee and read it. That's my intent, not to bother you during the week. If you want to know what I'm up to on the week, follow me on Twitter. You can also join the Access Club. That's our Patreon membership group. And that's where I share some deeper dives into the news that's happening this week. I also highlight deal alerts that are in the pre-IPO markets. When there's an IPO, like this week, I was active with the Circle IPO. You'll find some additional insights into what's happening as it's happening in a more timely manner. So join the Access Club. You'll get bonus content and support the show. That's all for the show. Thanks for watching. Thanks for listening, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.